Hello and welcome to video 5 of Predicting the Stock Market with Twitter series. I'm Adam with Pushing Envelope, the channel that gives you everything artificial intelligence and machine learning. This video, we're going to be looking at taking what we have done with the existing stock data and now actually applying it to the stock market. So we have some tweets that were from a period of 3 to 4 months. Now we're going to take that, look at what the stock market did during that time, and try to see if we can come up with some equation or some model that will give us the tweets to stock market conversion for us. So without further ado, let's jump over the Jupyter notebook and we will start building that out. Okay, over in Jupyter, we have a blank notebook up and ready to go. Hopefully you were able to execute the code in the last video and you have all of our stock data ready with the sediments and everything is good to go. So let's start importing some packages. We're going to be importing pandas as PD, importing NumPy. We're going to be importing matplotlib.pyplot. Import OS, import datetime, and lastly, import Y Finance. I typically do this as YF. If you don't have Yahoo Finance or you've never used it before, you should be able to install this if you're on Anaconda through Conda Forge, or you can pip install it. Either one will work. Go ahead and get those downloaded. All right, and we're good to go. So first thing we're going to do is figure out what all of our file names are. So we're going to say file is equal to os.listdir. And I have all of my files stored in a data folder. We click off to the side. We can see back in my data folder, I have all of the different tickers and their associated folders in here. You can always just print files to make sure you have everything. And as you can see, they're all here as well. Okay, what we're going to be doing. So within one of these folders, if I just open one up, you should now all of a sudden have this file. It's actually this one called stock data sediment, or whatever you decided to name it in the last video. This has our stock data. So this is going to be the actual tweets and the sediment associated with it, along with some metadata from the tweet that we can use to help make our prediction. So what we're going to be doing is we're going stock by stock through there, looking for that sediment and then associating those with the actual stock prices. I'm going to make a blank data frame. So stocks is going to be equal to pd.data_frame, and this is just going to hold the stocks as I start working through them. Now I'm going to say for x in range length of files. So we're just going to go through file by file. Now, this is how we're going to run it in the end, but I want to test it for now just to make sure everything works. So I'm going to say from 0 to 1. This is just going to give me the very first file, so I'm not running through it every single time I run this code. First thing I need to do, I'm just going to say file name is going to be equal to files at x. So this is just going to take whatever the file name is. Now I'm going to say data is equal to pd.read CSV. We're going to read in all of those CSVs. Now, it's going to be in the data folder for me, plus whatever the file name is. So you can see those printed on the bottom of the screen here. Plus, so that will get us into the folder. Make sure you do a slash. And now we're looking for that file, which is called stockdatasediment.csv. Just to make sure, I'm going to display, and as you can see, here we go. So we have our ID, we have the ticker, we have the date, we have the unclean text, the clean text, how many people favored it, retweeted, how many followers they have, how many people are they following, is it a retweet, and then finally, whatever the BERT model said was the sediment. Okay. Next, like we did before, this datetime is really in string form, so we need to convert that. We need to say data at datetime is equal to pd.to_date_time, and we're going to be converting data at datetime. All right, that's just going to make that column into datetime form so that we can actually use it to reference some of the stuff we're about to do. Next, we have our sediment as 0 to 1. I would really just like it -1 to 1, where -1 is our negative and 1 is our positive. So I am going to say data.locate, where data at sediment is equal to 0, and I'm going to be looking for the sediment column. And I'm going to be changing this to a -1. So if I display data after this, we can see now our zeros have turned into -1. Okay, I'm going to put 2 columns in here, and I'm going to show you what they're used for later. But I'm going to call one tweets, I'm going to initialize it to 0, and I'm going to do another one called weight, and I'm going to initialize it to 1. I can't remember if I said 1 before. Initialize both of these to 1 so that every single value has a 1 in it. Okay, so we have our sentiment, but that will get us pretty far. But I would like to make some sort of equation where whoever is saying it is weighted differently based on how many followers they have, how many times they were retweeted. Those are more impactful tweets, and so I'd like those to have more weight when we start figuring out what is the actual sentiment of the stock. So first thing I'm going to look at is how many followers this person has. And the thing is, something like Apple is going to have a ton of people, a ton of high visibility people, especially, tweeting about this. So I don't want it to be... I want it to weight equally a stock that maybe doesn't get tweeted very often with a stock that gets tweeted all the time. So one thing I can do is I can find what's the mean of the number of followers that people tweeting about Apple has, and what's the standard deviation. And that way I can start making some bins to figure out how heavily I should weight this person. And it won't matter what is the overall traffic on a particular stock every day. Okay, so to do this, I'm going to say data at followers. I'm going to just call this followers mean. This is going to be equal to data at followers. We're going to do a rolling average. So we're going to say rolling. I'm just going to take 10,000. It's a big number, but that's what I would like to do anyways, because I don't want to do something like Apple where they may get 1,000 tweets a hour versus like American Airlines, which may get 1,000 tweets per 2 weeks. So having this big rolling average will get me far enough out, so it shouldn't really matter. My minimum periods is gonna be equal to 1, so I can fill in all those missing values, and then I'm gonna say dot mean. So this is gonna be the rolling average. I'm going to do the same thing for the standard deviation. So if I copy this down here, I'm going to say followers standard deviation, STD. And then rolling, we're going to keep the same, but we're going to say .std at the very end of it. Now, this will give me one NA value at the very beginning. So I'm going to say data at followers underscore std equals data followers underscore std dot fill na, and we're just going to fill it with data at, I'm going to do it from, so the very first value is going to be missing, so what I'm going to do is I'm just going to take the second value and fill it in there. So I'm going to say data at followers std dot values at 1, and that will fill it in. Let me run this to make sure we don't have any errors and just see where we are right now. I do have an okay, so I did follower, and this should be followers, and there we go. Okay, let me scroll over. Now you can see we have our mean and we have our standard deviation. Now what we can do is figure out, okay, what bin should this person be in? If they're tweeting about it and they're below the mean, maybe we just treat their tweet as one tweet. But what we can do is maybe your follower count is above 2 standard deviations, which means you have a ton of followers compared to everyone who's normally tweeting about this. So we can weight maybe your tweet 3 or 4 times as much as somebody else. So to do that, we can say data.locate. We're going to have multiple conditions. So I'm going to use a parenthesis here. I'm going to say data at followers. I want to know when the follower count is greater than data at followers mean. So I'm looking for whenever the follower count is greater than the mean, but I also want to know when it's, for this one, I want to know, I'm going to copy this. I'm going to say, and when the followers is less than the mean plus data at followers underscore std. So this is going to return whether or not the follower count is in between the mean and the first standard deviation. Okay, once I have that, I can change the weights. So right now I'm looking for where this is. Okay, so now that is going to be my index. Now I'm going to be changing the weight column. Something happened here. It's all right. I'm going to be changing the weight column. This is what we initialized to 1 up top. But now I'm going to say plus equals 1. So I'm just going to add 1 to that. So now this person is tweeting with followers in between the mean and standard deviation. Now their tweet is going to count twice as much as the other ones. Okay, and basically what I'm going to do is I'm going to copy this, and I'm just going to continue. I'm just going to continue to do this for if the follower count is greater than the mean plus data at followers standard deviation. And if the follower count is less than the mean plus 2 standard deviations. So standard deviation times 2. In this case, instead of adding 1, I'm going to add 2. And the last one will be anywhere. I'm just going to take this first half of it. Anywhere the follower count is greater than or equal to the mean plus 2 standard deviations. So standard deviations times 2. We're going to update the weight by 3. Hopefully that makes sense. I should be able to push this down just to make this a little more visible. Okay, so let's just review what I'm doing here. So the first follower count, if it's greater than or equal to the mean, but less than 1 standard deviation away from the mean, then we're going to add 1. So this would be 1 on top of the initialized one. So this tweet is going to count twice as much. For someone who is tweeting in between the first and second standard deviations, they're going to be counted 2 plus 1, so 3 times as much as somebody else. And finally, if your follower count is greater than 2 standard deviations above the mean, then you're tweeting at 4 times the count. Okay, so that is what we're going to be doing for the followers. Okay. Now, I'm going to do all of this. So I'm actually just going to copy everything we did here. So from these 2 little chunks right here, from when we defined the mean and standard deviation to figuring out how far away it was, because I'm going to do the same thing for retweets. So everywhere it says followers, I'm just going to go RTS. Replace followers with RTS. Okay, so this is going to give us the rolling average and the rolling standard deviation for the number of retweets somebody has. And we're just going to continue on down here as well. So we're going to change it. Same thing. If your retweets are between the mean and the first standard deviation, you're going to count as twice, and so on. This may take a second to do all of these because there are quite a lot that you have to change on this. All right, looks like 3 more. Okay, so this should be working. Now, notice here, I'm still adjusting the weights. So now the weights at maximum could be 3, 6, 7. So someone's tweet could be worth a value of 7 tweets just by maxing out both of these. I'm going to display data and scroll over. Okay, as you can see, this person has a weight of 5. So their tweet is coming in at 5 times the number. And that's likely due to the number of followers. And right off the bat, the retweets is low. So they're going to get a point of 1 more for the retweets. But that's going to change as soon as we start getting data, as you can see. Now we're getting somewhere on here as well. So that's going to work for getting us some sort of weighted average. So when we want to figure out how many points to add to this, all we need to really do is multiply the sediment by the number of weights. So we can say data at sediment weighted going to be equal to the data at sediment times however much that should be weighted. So times weight. Okay. So that gives us the weighted sediment that we should be using to figure out if we're trading this stock or not. Okay. Now that's great, except for it's still on an individual stock level. So I'm going to slide over. You can see here's our weighted sediment. Negatives are now switched to, this one's -4 versus +4. Okay. That's great, but now we want to, if we want to predict on a daily level, I want to group all of this by day. So I'm going to say data is equal to data dot group by data dot date time. So this is going to take the date time column. Dot dt is how you get all the date times, and I'm going to take the month. So I'm going to group by the month, and then I'm actually going to copy this because I not only want to group by month, but I want to group by the day as well. Now when I group all these, I want to just sum all of the values. Okay, now you can see we have 92 rows for this one, but our month and our day are grouped, and now all of these sums are added for each of the different columns. Now what we can do, one thing that dropped off was whatever the ticker symbol was, which will be super important when we're starting to figure out which stocks to invest in. So we're just going to re-tackle it, say ticker is equal to file name dot split. We're going to be splitting on the underscore, and we're going to grab the first value. Again, that's because the file name, if I go to one of these, is the ticker underscore and then all the dates and everything. So we just want the very first one if we split it on the underscore. Okay. So we have the ticker. One thing we need to do is we need to reconvert our indices back into a date, because that, again, is also going to be super important. So we're going to say data at date is equal to pd dot date time, to date time. Okay. Now, we're going to be throwing a list into here. But what we need to do is we need to, when we reference the index, it's going to be like a 3, 10. So we need to parse that, and we're going to save those as x and y. So I can say string at x plus, I'm going to put this into datetime notation. So this is going to be the date. So this is going to be the month slash day slash year, plus the string at y. And plus, I know the year is 2016, so I'm just going to throw 2016 in there. For x, y in data.index.values. Okay. Let me run this. All right, as you can see, we now have the date saved in here. One thing that we need to do to this. So when we're predicting the stock price, we're doing it based on the tweets from the day before. I don't know. I'm not going to be able to invest in it the same day because we're looking at the day before. So I need to add a day to this date right here, which will make my tweets one day older than they're supposed to be. So I'm going to say plus date time dot time delta days equals 1. So we're just adding a day to each of these dates in order to show that they're a day old, essentially. We're trading on information from the day old. If I don't do this, then I am leaking some of the data, right? So I'm not going to be able to know something that's happening. I'm not going to be able to invest something on the open from a tweet that happened 5 hours after the stock market opened. So I need to shift that so I'm not investing with information that I don't know. Okay, so that will take care of the date. I'm going to say data equals data dot reset underscore index drop equals true. This is just going to get rid of those. If I scroll over those random numbers that were the date before, I don't really need those anymore. If you remember, when we grouped all of these, we summed them, which is okay, but now I need to know, I need to divide by the number of tweets. So I need to say data at sentiment weighted equals, let's just say divided by equals data at tweets. Now, I didn't explain this one before. Up here, when I initialized tweets to 1, what this is doing is every single tweet was giving it a 1. So now when we grouped it, the tweets column shows you how many tweets occurred during that day. So for instance, this first day, there were 33 tweets, there were 45 tweets, next one, blah, blah, blah. So now if I divide by that, this will give me the average weighted sentiment. Okay, that will be good for that one. Some of the things that I would like to know is the current sentiment higher or lower than it was the day before? And I can again do that by a rolling average. So I can say data at sentiment MA is going to be equal to data at sentiment data at sentiment dot rolling. I'm just gonna do a 3-day rolling average. I'm gonna say min period equals 1 to fill those NAs. That will give me the sentiment. The volume of tweets is also could be important. So I'm going to copy that, and I'm going to say, I'm just going to call this tweets underscore MA is equal to the rolling average of the number of tweets. On both of these, I need to say dot mean to show that we're doing a rolling average and not a rolling sum or anything else like that. Okay. So, great start. We have our sentiment, we have our number of tweets, we have the rolling averages for the sentiment and the number of tweets. So all of that's good. Now we are missing the actual prices of the stock so that we can compare these two together. In order to do that, I need a start date and an end date to know when to pull this from. So data at date. So our start date is going to be data at date.min. So this is going to be the minimum date. And then we also need the end date. It's going to be the same thing. Data at date.max. One thing that will happen here is I will need to know the percent change, which I won't be able to get without adding a day to the future of this. Also, when I do Yahoo Finance, my end date is actually not included. So I'm going to add 2 days to this. So I'm going to say date time delta days equals 2. I'm going to add 2 days to the end date. So we're pulling 1 day into the future. Well, into the future relative to these stocks anyways. Now we can pull our prices. So prices is going to be equal to YF. That's our Yahoo Finance module that we imported. We're going to be downloading. So .download. Tickers is going to be equal to file name .split. We're going to be splitting on the underscore. We're going to be taking the first position. So that's going to be our ticker. Now we need our start date. So start is equal to start date. End is equal to end date. And I am going to say dot reset underscore index drop equals true. All right, let's display prices. Oh, sorry, I don't want to drop the index because our index is the datetime. So we want to force, originally this date column right here was the index. We want to force that to be an actual column, so don't drop it. But you can see we have our date, open, high, low, close, adjusted close, and volume. We're going to be using adjusted close to do the rest of this. First thing we need is, I don't care about predicting the closing price. I just want to predict the percent change. I want to predict if the stock is going up or down, not necessarily how much is going up or down. So I'm going to say prices at percent change. Let me do percent. Let me keep it consistent. Percent underscore change. This is going to be equal to prices at adjusted close dot pct underscore change. Pandas has a built-in percent change function. We're going to be timesing this by 100. And then we're going to do a dot shift of -1. All right, reason for the negative, the shift is because we have our tweets, but we need to find the percent change not into the future, but from the past. So for instance, since it is into the future, not from the past. So for instance, adjusted close, if I do the percent change from here to here, it's going to be positive something, but it's going to put that value on the second line. I need that to be into the future, so I need it on the first line so I know what I'm predicting, where I'm predicting for these tweets. Okay, that will give me the percent change. Let me close out my parenthesis. Okay. Percent change is okay, but I don't want to I don't want to do a continuous value. I want to do discrete values. So I'm going to bin the percent changes. I'm going to say prices at percent change bin is equal to pd.cut. This is going to just break our data into different intervals. So pd.cut prices at percent underscore change. Okay, and now cut is going to be looking for some intervals. So I'm going to say anything from negative 100% to 0. So any negative number, that's going to be our first bin. Next one is going to be from 0 to, let's say, 2%. And then 2% on is going to be our last bin. So we're going to be outputting 0, a 1, or a 2. And I'm going to define labels as those, so 0, 1, or 2. And it's just going to bin our percent change by how much it is. If it's large, it's going to be a 2. If it's still positive, but under 2%, it's going to be a 1. And if it's negative, it's going to be a 0. Okay, so I have these two individual data frames. Let me run this. You can see where that is. So something like this is up 3%, so that's going to give it a 2. This isn't above 2%, so it's going to be a 1. This is negative 0. But I have these two individual data sets, and I really need to put them together. So we're going to merge those two data sets. So data equals data.merge. I want to merge with prices on the date column. Pass in that. And then how equals left, which is going to keep everything on the left, and any hits on the right are going to be automatically added to the data set. So I'm no longer need to display prices. But you can see now we have our stock data, and we have the we have the tweet data on the left and the stock data on the right, all in one data set. Now there are going to be a lot of NAs because the stock market is not open every single day. So we're going to need to drop weekends. I'm just going to say data equals data.drop NA dot reset index, passing in drop equals true. And that is going to be it for our data. Actually, so we do have some columns that we don't care about anymore. So I'm going to clean it up by saying data equals data, and I'm just going to pass in ticker, date, sentiment weighted, sentiment MA, tweets MA, adjusted close, percent change, and percent change bin. Okay, this is just going to clean it up, drop some of the other ones that we've already worked through. Bin singular. Okay. As you can see, our data set is way smaller now. This is a little more manageable than what we had before. It's only the important stuff in here now. Okay. That is going to be it for what we need to do for the data set. Last thing is just to save it. So to CSV, we're going to be passing this into the data folder at whatever file name we're at. And then we're going to be saving this as stock data inputs .csv. Index equals false because I don't want to save the index. Okay, so this is just going to save it into that folder as stock data inputs for each of the stocks. I also want to say stocks is equal to pd.concat stocks and data. If you remember way back up at the top before the for loop, we defined this blank data frame. I am going to just be adding those in as we complete them. I'm going to reset the index. This should be stocks. Okay, I want to know when we've completed some of these. So file name dot split. Okay, we're going to be splitting that at 0. Completed. Okay, this is just going to print out whatever the ticker symbol is, dash completed, so we know which one's complete. One thing, some of these stocks may be delisted at this point, so they may not be within Yahoo Finance. One way to get around that without hitting an error every single time is you can use a try except. So I'm going to put a try way up here, and I'm going to indent all of the code that we made. And then down here, I'm going to do the except. So I'm going to say accept exception as E. I'm going to print the file name dot split on the underscore, grab the first one. So that's going to be the ticker name. And then I'm going to print E. E is going to be whatever the error is. And very lastly, we're going to save the stocks data frame to CSV. We're going to call this one combined stock inputs.csv. Okay. This is going to take all of these stocks. So let me do index equals false. All of the stocks that we collect over this entire thing and save it to a data frame. Let me run this one last time. We can see this stock was completed. Now we can pull off only doing the first one and do every single one and run it. As you see, this is going to work through each of the stocks. There's 103, so it will take a second to go all the way through. Here's an example of some of them that are delisted. Or just don't have data all the way back then within Yahoo Finance. So instead of erroring out, it's just going to send this error message that it wasn't downloaded. Okay. So we now have our data. So if I display stocks, you can see I have all of these different rows with all the different tickers, dates, and all the sentiments and everything else within here. So we're going to be using this, and I'm going to use a random forest classifier in order to make the final prediction based on the sentiment. So from sklearn, the ensemble import random forest classifier. We have those stocks, but I'm going to say stocks equals stocks dot sort values. I want to sort the values by the date and the ticker. So that way it's in chronological order. I'm just going to display stocks one more time. Okay. I'm going to take a first section, so maybe like a month and a half of the data as training data and use the rest as testing data. So I'm going to say dtrain is equal to stocks.locate. So I want to locate where the stocks at date is less than, I need to define a date time. So datetime.date time, I'm going to say year is equal to 2016 because that's when this data was from. Month is going to be equal to, let's say, April, and day will make the 15th. That will give us like a month and a half of training data. So we want to locate where that is true. And then I'm going to reset the index. Okay, so that will give us our training data. I'm going to do the same thing for our testing data. So dtest is going to be where the date is greater than or equal to the 15th of April. Okay. Next, we need to get our training data. Right now we have a lot of data that we're not going to be passing into the model for classifying. So xtrain is equal to dtrain certain column. So the sentiment weighted column, sentiment MA column, the tweets column, the tweets MA column. We're going to say dot values and put that into a NumPy array. So we're only using those 4 as our inputs, and then our Y train will be equal to D train at only the percent change bin. That's what we're going to be predicting. Copying this, we can do the same thing for our test data. So change dtrain to dtest. I'm going to print xtrain.shape, ytrain.shape, and same thing for xtest and ytest. Just to make sure they're the same. We do have something. Okay, no, that is correct. So we are training with 1,000 data points, and we're about to predict on the last 3,000. Okay, now we're going to be making a random forest classifier. I'm just going to print a space because I know I'm going to print some other things. So we're going to define our model to be equal to our random forest classifier. I'm going to say random state is equal to 1 just to make this repeatable. It's going to give you the same model every time. We can say model.fit. We're going to pass it the training data, and we need to pass it the labels as well. Then we can make our prediction. So preds is equal to model.predict. We're going to be predicting the X test data. Now, accuracy on this one's a little harder because it's not binary, and also you could be losing more money than you're gaining even if you have a positive accuracy. So one thing that could be useful is to know when your model is telling you to invest and then it turns out to be a negative. So let's say the length where, so let's do an np.where. So I want to know where the predictions was greater than 0. So anything greater than 0 means invest because it was in positive. And where the Y test was equal to 0. So this is saying the model is telling you to invest, but you ended up investing at a negative return. Doing the length of that, it'll tell us how many data points were like that divided by the length of X test. Or the length of preds, either one. All right. Okay, so 23% of the time we were predicting, or we were investing when it was a negative. It could be good, it could be bad. We'll have to actually get into the data to see what this turns out to look like when we start investing. So I'm going to print another divider. I'm going to save those predictions. So dtest at prediction is going to be equal to preds. Now I'm going to start investing. So let's say I have $1,000. I'm going to do two things. I'm going to say bot capital is equal to 10,000. And I'm going to say a long capital is equal to 10,000. This is how much we're starting with in our account. So the bot is going to be what we're creating here, the model. The long capital is if I just threw money into the stock market without making a decision by the bot, how would I do versus how would the bot do? I need to store these over time, so I'm going to say bots is equal to a blank list and longs is equal to a blank list. And now I'm going to go, we're going to get the dates. So dates in dtest at date dot sort values dot unique for date and dates. So now we're going to go date by date and start investing in the stock market. So we're going to say the temp is going to be equal to the dtest where dtest at date is equal to our date that we're looking at right now. This is just filtering out only what is trading today. Our long capital is going to be equal to the long capital plus, we're going to do a double parenthesis here, long capital divided by the length of temp. All right, this is saying we have $10,000, but I want to evenly spend it on all of the stocks. So we're going to evenly divide 10,000 by however many stocks there are and invest that into it. This may not be super realistic if you can't, if you're not using like Robinhood where you can invest fractions of a stock. So you may need to adjust this for buying a single share at a time or multiple shares at a time. But for now, this is how I'm going to leave it. So we're going to take that amount of money times temp at percent change divided by 100. I have this in percent notation right now, so I'm dividing by 100 to get back to a fraction. So I have all this. So I have the amount of capital times the percent change. That's going to get me the amount of money I earned. Dot sum will give me over all of these stocks, and then this amount I earned will be added to my existing long capital. Okay. Longs.append long capital. I'm going to plot the dates versus the longs, and I need to do it from 1 on because I have that. If I go up here, I can pass in the starting capital as the very first data point. So if I do longs from 1 on, I won't grab that first data point. We're going to say the color of this one is going to be equal to blue. And the label is going to be equal to long invest. I'm also going to make the figure a little bigger. Okay. Okay, so this is for date in dates. I have an error up here. I spelled bot capital wrong. I also forgot the S up here. Okay. So over time, this is what the long invest looks like. One more thing I can do is plt.legend to show our label. But this is what a long investment would look like. It ended up you were a little lower. But let's go ahead and calculate our bot capital now. So it's going to be pretty much the same thing. I'm going to copy this down here. We're going to change it to bot capital. So everywhere it says long, change it to bot. Okay, but the thing that's going to change is our temp. So temp is going to be equal to temp where the temp at prediction is greater than 0. So now I don't want to just invest in everything. I want to invest only in what the model is telling me is going to be positive. And then like I did down here, I can say bots dot append bot capital. And now down here, I can, instead of long invest, let's call this bot invest. And we're going to change the color of this one to red. Okay, as you can see, here's our chart. I'm trying to get away from my face here. But we are doing fairly well. Our overall, I think throughout this entire thing, except maybe right here, our bot was making more money than just blindly investing in the stock market. So it definitely is something here. I can also see what this final percent difference was. So I can say print long-term investment. This is going to be equal to, let's print what the final value was. So longs at -1. So this is what the final account balance was. We're going to round this to 2 decimal places. And now we can do the percent change. So I'm going to make this a little prettier and put it in some parentheses. But I'm going to say we're going to round the, it's going to be the longs at -1. So the new minus the old. So the longs at 0 was the old, divided by the longs at the old, which was 0. All of that times 100, and we'll round it to 2 decimal places. And then we'll do a percent. So this is just making it look a little prettier. Okay, but you can see down here we have whatever the account balance was and then the percent change. Now if I copy this, I'm just going to call this bot investment, and we're going to change this bots across the board. Okay, so our bot investment, so our long-term investment, we were down 2%. Our bot investment, we actually were pretty much even, and we just didn't lose money. So that's also a good thing, is when you're not losing money from your long-term investment. So overall, I thought this was fairly successful. I wasn't expecting this big of a gap between these two, and I think if we would have continued, like up here, we were making $500 above. So I think as this would have continued, we could have saw the price grow higher and higher, and that gap definitely grow. So I hope you guys got something out of this video. I had a lot of fun putting this together. If you have any questions, please let me know. And I will see you guys in the next series. Thanks for joining, and good luck.